Welcome to this question. As always, I allow you to have your revision pages open with you to be able to view and add any relevant details that you need to study and remember. But if you're not going to study your revision pages, please rather do not use them at all. Then remember, you need to make use of your standard when you do these questions to ensure that you know how to use your textbooks. Right, now this question, 15 minutes to read. As always, I recommend that you identify or you actually write down your time when you start and when you need to be finished by 8 o'clock. Why? Because when you look at your requirement, remember, you need to allocate your minutes to each section. I want you to allocate the time when you need to be finished with your sections. If you start at 8, you need to be finished with at 8:25 with A, 8:32 B, and 9 o'clock with C. Why do I recommend this? Remember, when you start with question A, you are in a zone, you are thinking about what you need to include for question A. And every time when you need to identify how many minutes you have left, you will have to recalculate the minutes. If you identify the time when you need to be finished, it will be much easier when you look at your watch and you identify 5-10 minutes remaining. Right, now let's read through the scenario. Ignore value added tax VAT. You are recently qualified as a CA and have been employed by OBD Ltd. OBD Ltd provides accounting and tax consulting services to various clients. Your portfolio includes multiple clients for whom you provide your assistance. All clients located to you have a 31 December year end. Client 1, Johnson Ltd. On 15 November 2020, Johnson Ltd purchased a holographic 3D touch sensing display patent from Royal Limited at a cost of 325 million. This patent grants Johnson sole access to all international and local patents with regard to the design and manufacture of holographic 3D touch sensing display screens. Therefore, only Johnson can utilize the patent to design and manufacture the holographic touch screens. This will result in Johnson being the only seller of holographic 3D touch screen smartphones, and it will also ensure that Johnson is the only designer and manufacturer of such smartphones. Johnson will manufacture all the other components of the smartphones and it will assemble the holographic 3D touch display screen smartphones. It is estimated that 80 million holographic 3D touch screen smartphones will sell within the next financial year at a satisfactory profit margin. Client 2, Student Hub Limited. Student Hub Limited is a new real estate agency which specializes in the selling of student accommodation. Student Hub operates in the Western Cape in South Africa as part of its expansion strategy. A decision has been taken by the directors of the company to open a new office within the Gauteng region. Student Hub paid 55,000 Rand to social media specialists to advertise on their social media platforms all student accommodation which are for sale as from January 2021. This amount was paid on 15 December 2020. Client 3, MP Logistics Limited. You received a draft set of annual financial statements of MP Logistics, a client that provides warehousing, logistics, and car rental services. The client informed you that they find it difficult to classify certain items in the statement of financial position and require your assistance. The following is an extract from the statement of financial position of MP Logistics as at 31 December 2020. Right, they have liabilities, non-current liabilities, and they've included long-term borrowings, note 1 and 664.4 million. Note, long-term borrowings. On 1 June 2020, MP Logistics obtained a loan of 627,858,000 from Cap Bank Limited for the construction of a large technologically advanced warehouse. The expected completion date of the warehouse is July 2023. As per agreement with the bank, MP Logistics will only start repaying the loan after completion of the project. However, interest is payable annually at 31 May at 10% per annum. The loan agreement with CABank contains a financial covenant clause on the debt to equity ratio, which is a clause that requires IMPI to maintain a maximum debt to equity ratio of 2.6 to 1. This is in line with the industry norms. Should IMPI breach the covenant, the loan will become payable on demand immediately. On 15 December 2020, the financial accountant of IMPI Logistics discovered that its debt to equity ratio increased to 3.2 to 1. It should be 2.6 to 1. This was mainly due to significant fair value adjustments which were processed in accordance with international financial reporting standards. On 10 January 2021, CABank agreed in writing to waive its right to enforce the loan covenant for 1 year until 31 December 2021. Authorization of financial statements. The financial statements of IMPI Logistics for the year ended 31 December 2020 were authorized for issue on 20 February 2021. Okay, so guys, when we look at this, they indicate to us that they have difficulty to classify certain items. Now, when we look at this, if there's a classification problem in our statement of financial position, we need to think about IS1, preparation of financial statements. Client 4, Impact Limited. Impact is a company operating in the manufacturing and maintenance industry. Impact is listed on the Johannesburg Stock Exchange. You are currently reviewing the financial statements of Impact. Your assistant has presented you with the following schedule of information relating to the year ended 31 December 2020. Items. Impact's accounting profit for the year ended 31 December 2020 after correctly accounted for all the items. Dividends received. Dividends received are exempt from normal tax in terms of Section 10(1)(k). Foreign income received after deduction of 6,000 Rand relating to foreign taxes. The foreign income is not taxable in South Africa. Guys, when we look at this, it appears that this might relate to our IS12, right? Now, when we look at the foreign income, remember they indicate to us here after deduction of 6,000. Therefore, we are able to identify that the total foreign income was 48,000. Gain on disposal of land. Impact purchased land for future development of a new factory building on 31 March 2019. Due to the recent availability of factory buildings in the area, Impact sold the land at an amount of 1,620,000 on 1 January 2020. The original cost of the land amounted to 1.2 million. Land is measured according to the cost model in terms of IS16. The proceeds from the sale of land is a receipt of a capital nature for tax purposes. Depreciation on plant and equipment. The tax allowance on plant and equipment amounted to 1,080,000. We are able to identify, guys, that the depreciation is 1,051,200. They indicate to us on 31 December 2020, the carrying amount of the plant and equipment amounted to 3,801,600, while the tax base was 3 million. Correction of prior period error. On 30 November 2019, Impact received an amount of 360,000 from a customer for service that were rendered during February 2020. The accountant recognized the 360,000 as revenue in November 2019. Okay guys, look at this. In 2019, they received the 360,000, but the services will only be rendered in February 2020. Then the accountant recognized the amount as revenue in November 2019. For tax purposes, the 360,000 was taxed in the financial year ended 31 December 2019. Assessed tax loss on 31 December 2020. Impact suffered operating losses during the previous financial year and had an assessed tax loss of 1,080,000 on 31 December 2019. The company correctly utilized 41 to 800 used of the assessed tax loss by recognizing a deferred tax asset of 115,584 relating to the assessed loss on 31 December 2019. Additional information. There are no temporary differences other than those that are apparent from the information contained in the question. The only non-taxable and non-deductible items included in the accounting profit or loss are those that are apparent from the information provided. The normal income tax rate is 28% and the capital gains tax inclusion rate is 80%. You may assume that all amounts are material. I will briefly read through the requirement before we attempt each section on its own. A. Discuss in terms of the conceptual framework for financial reporting 20.18 whether the patent referred to client 1 and payment to social media specialists referred to client 2 may be recognized as an asset in the financial statements of Johnson Ltd and Student Hub Ltd for the financial years ended 31 December 20.20, 16 marks, 1 mark communication skills, not free but easy. Ignore any normal income tax implications and your answer must comply with IFRS. B. Discuss with reasons whether the loan from Cap Bank referred client 3 has been correctly classified as a non-current item in the statement of financial position of MP Logistics as at 31 December 2020 in accordance with RS1. Presentation of financial statements. Also discuss the correct classification when necessary. 5 marks, ignore tax, and your answer must comply with IFRS. C. Prepare the income tax note to the financial statements of Impact Limited, refer client 4, for the year ended 31 December 2020, as required by IS 12, paragraph 79, 80, and 81 C1. Therefore, we know, guys, we need to include our recon. Communication skills, 1 mark, not free but easy. Comparative figures are not required. The movement in temporary differences in the current tax calculation has to be calculated by using this statement of financial position method. This is what we use, and your answer must comply with IFRS.